Welcome to TradeTheMBI.com. This is John's reports for the 13th of February. Well, it was an exciting day. Not a big surprise. Again, we've been in this constant little malaise here within this range and weak shakeout in the negative side of things. We didn't get our full dip of orange, so we had a slight bias that was just straight across within the same range, and that's what we've been doing. What we've been waiting for is this MBI white spike move towards the zero. And ironically, just in time for a rising zero, looks like we'll be able to get that meeting. It's just a matter of seeing MBI white spike back above. But you're back below 25 with the magenta from a daily standpoint. That's just, really bad. And it was very clear intraday. I'll show you in the 5 minute in a second that, as well as the 50K, was pretty clean. I saw it happening live and took advantage of it. It was pretty fun. And it just started soft and then it just started picking up momentum. And that was pretty straightforward. And I'll show you how easy that was given what we have from the indicators. But NQ also extremely weak here and revisiting the low range on that. And again, anytime you have that pivot that happens on a daily near 25 or below is, going to zero. Just pretty much set. This bodes well for a softening of the economy. Of course, labor numbers and that all week. This was really, can't even call it a gut punch to oil because it really didn't make that big a difference. If this sustains itself, it moves lower, but it hasn't. And again, I've been pointing this out for some time. This has been the bane of why the move for Trump, and that just hasn't worked. It's why he shifted gears in a lot of different areas, trying to get some kind of movement from an energy standpoint, and it just isn't working yet. And it's almost too late now for midterms. Maybe he's got a month or so to make things happen, and then the die is cast. The question will be whether they get the SAVE Act passed. If they don't do that, then it's not going to be a good one for his second half of the term, and he'll be lame duck going into a impeachment over and over again thing, and that will be again market turmoil, and you won't have any budget deals, and of course. That's going to just be more turmoil. People are still excited about the euro, which is just in a nosedive by itself. When you get market sell-offs like this, we see these kind of dips in gold that people have to liquidate. Not a surprise. It didn't phase me. Even the same with crypto, and that would have expected a little bit more, but they've already been beat up so much. Most people have transitioned. So what's left there is pretty much people are holding. You're not going to let go of anything more than this. So you're probably just likely to see a continued edge up. And that's always the thing. It's a matter of moving out your really weak hands versus those that then want to start to accumulate larger positions. ETH right back at 0%. And you can see all the readings from the MBI are set. And again, this is that same continuation pattern here where orange caught between cyan and green, and as they separate that ratio, and that's actually one of the elements I've been working on programming wise because that's going to be the next development that will show it, and it really begins to depict when you see that separation begin. You're looking for weakness, and then it's just a measure of where you are with your orange versus steel relationship, and becomes pretty straightforward. In this particular case, it began pretty early on, right about here. We ended up with a narrowing of cyan and green on the DOC, and then you can see as it began to separate, that was the first beginning of the short signal, which is indicated here by that little white breakdown candle that I have right there. It also corresponded to the breakdown of magenta below the 25, and that was it. I mean, there wasn't really anything else to think about. You had blue under gold, gray right there as well, but it's just a matter of okay, you're going to get to the zero. The question then will be, what do you have at that point? And with MBI white leading, oh yeah, good night. And what did we do? We filled back. Well, there weren't that many positive extremes. What we had was the dip below the red line, right back over here, which hasn't quite filled yet, and then most of these weren't quite red. This one was. So that was your low equivalent takeout. from a positive extreme standpoint. The exact one right there. It's this low right here, which was 68.45. So we just took that out. Actually, where was this low right there? Just below that, the 40 range. So 49, and then pre-market here we took it out. So it was all clean, beautifully done, and just completely right back to where everything began. So again, back and forth with the option play. It really just becomes one of those games that they play back and forth, and it does a beautiful thing from a volatility standpoint because, as I pointed out, volatility would continue to rise, but within this built-in range. And then from an intraday standpoint, likewise, same thing. So you have DOC spread. So it's that cyan rejecting of uh, midterm, which is the green, and then at the same time we also saw red starting to fade. So that was beautiful. And what I tend to look for are these ranges right here, where you get the cyan caught between um, red and green, but at this particular case, where steel completely outpaced. You get your little brief push-ups. Steel moves above plus 13, in which case you see those little bounces. But anything below the 23%, you're not even really thinking about doing anything, because that below 23%, if you don't have a close above it, you're not getting anywhere. And then once we did get a close above 23%, it's like, okay, let's look at it. And then boom, instantly you get a dip off here. So how sad is that? You're barely reaching the 38%. MBI white spike already came in, and now you're already dipping below the MBI 25 line for magenta. It's a death knell. You know you're going to zero at that point. So, I mean, from a trade standpoint, you already know that you're looking 68.90 at this particular range, and you know you're going to 60. So you already know you've got a 30-point built in on a 5-minute chart without even thinking about it. I mean, you don't have to blink. So, do the math at, $50 a point, 30 points, you're per contract, you're set right there. You've already got that pre-locked in, and that pretty straightforward stuff. And I mean, even from the intraday was even bigger. I mean, so then the question becomes, can you measure, your sigmas, how big a move? Well, you had the MBI white spike. So from this move, you're already below the 50% at this particular stage from the 100%. So that was your first move. And then secondarily from there, you have your 50% to the zero. Now it's really combined right there. But if we look at that little side chart, you can see it from there. You had a 92 to 73. And then once the breakdown begins, then it's just a matter of following your 23%. You don't have to do anything other than just stay above it for a stop, and you just continue to follow it. Doesn't get any easier than that. So that's all I have to say. Just beautiful. You love days like these, and most people just don't expect it, and that's exactly why they work. Now, from a pre-market here, we can see in the European session, they're trying to bring it back, but it's not going to work. So that's the long and the short of it. As always, trade well. Get ready for Valentine's Day. We'll see if there are any hearts for the market come tomorrow. Doubt it, but hey, you're going to have some type of pullback up into here. It could be as much as a third running back up into the dip, but still, you haven't changed any systemic problems, and that's the real culprit. This propensity for the AI disruptions is starting to gain momentum, and that's not going to break overnight. So it's just going to get worse. Anyway, have a good one. Trade well. Anything relevant, I'll put it on team chat.